Welcome to Unity Global News. Could the Iran-China oil trade trigger a global energy crisis? Here's the latest update. The White House says that gasoline prices could fall once a peace agreement is reached in the Middle East. However, the conflict has already disrupted Iran's oil exports, creating uncertainty in global energy markets. Despite U.S. sanctions, Iran continues to sell large amounts of oil to China through its so-called shadow fleet of tankers. Reports suggest that China purchases nearly 90% of Iran's oil exports, providing billions of dollars in revenue to the Iranian government every year. Energy industry leaders are warning that a vast network exists outside traditional oil markets, allowing sanctioned oil to keep flowing. According to experts, the financial incentives are so strong that many companies continue moving oil despite restrictions. China has reportedly instructed some of its companies to ignore U.S. sanctions on Iranian oil. Analysts say this highlights a major problem with sanctions. They only work when they are actively enforced. Without enforcement, sanctioned countries can continue trading and even find new opportunities in alternative markets. Experts argue that recent efforts to monitor and stop certain tanker movements are finally putting pressure on ships that have been violating sanctions for years. They say enforcement is just as important as creating sanctions in the first place. Meanwhile, discussions between former President Donald Trump and Chinese President Xi Jinping have raised questions about China's role in the crisis. While China could potentially help ease tensions, it remains heavily dependent on Iranian oil supplies. China relies on imported energy for a significant portion of its economy. Although Beijing has promised to buy more American energy products, analysts believe it is unlikely to completely abandon Iranian oil anytime soon. At the same time, the United States and China remain economically connected. America depends on China for various goods, including rare earth minerals and manufacturing products, while China continues to seek access to American technology and agricultural exports. Experts also point out that some Chinese refineries have ignored U.S. sanctions, continuing to process Iranian oil despite restrictions. This ongoing trade has weakened the impact of sanctions and complicated international efforts to isolate Iran. Another major concern is the Strait of Hormuz, one of the world's most important oil shipping routes. Analysts warn that any disruption in the strait could have serious consequences for global energy supplies and significantly impact China's economy, which depends heavily on oil transported through the region. Some experts believe that allowing Iran to use the threat of closing the Strait of Hormuz gives Tehran significant leverage over the global economy. They argue that the international community must ensure that this strategic waterway remains open and secure. Questions also remain about any future peace deal with Iran. Critics argue that even a successful agreement may not eliminate all risks if the current Iranian government remains in power. Concerns have also been raised about proposals to invest hundreds of billions of dollars into rebuilding Iran, with opponents saying such funds could strengthen the regime rather than help ordinary citizens. As tensions continue in the Middle East, global markets, energy companies, and world leaders are closely watching developments that could affect oil prices, international trade, and economic stability worldwide. Now it's your turn to weigh in. Do you think China should stop buying oil from Iran, or is it simply protecting its own economy? Let us know in the comments. If you enjoyed this report, hit the like button, share this video with your friends, and subscribe to Unity Global News for more breaking stories from around the world. See you in the next update.